Welcome to Retirement Rescue Radio, a show specifically designed to help retirees and pre-retirees maximize their financial efficiency so you can live the retirement lifestyle you've always imagined. Your host is Nate Miller, investment advisor representative and author of the CPR Retirement Rescue Roadmap. Nate discusses thoughts and ideas from some of today's most knowledgeable professionals in the field of finance. He offers strategies along the way to help you make better financial decisions so you can maximize your retirement. This is Retirement Rescue Radio.
Hey there, everybody. Nate Miller here, host of Retirement Rescue Radio, and we've got another episode coming at you this week where we're going to be talking about everybody's favorite subject, taxes. But not like we're not going to talk about lowering taxes for once. We're also not going to talk about raising taxes either. We're going to talk about just the results of all of the tax that's out there, income tax, basically. And this is going to be from one of my favorite websites, taxfoundation.org. And there's going to be a link to it in the show notes here. And I love this place because all they really do is compile all of the IRS's data, all of the information that they get on all of the tax returns that they receive. They compile all this data and they give us the numbers. And I love this because just this really takes out any of the right wing, left wing, party politic talk, whatever. It gets rid of all that. It just basically just gives you the numbers and gives you the statistics, and that's it, right? It's like we can make our own inferences from that. And I like this because there's a saying that those who have the facts will never be at the mercy of those with an opinion, right? And so when we hear all these articles about, oh, the rich don't pay any taxes or they don't pay their fair share or whatever, it's absolutely hogwash. It is absolutely hogwash. It's lies. It's propaganda. Because when you look at the numbers show the exact opposite of what we hear in the news all the time. And I think this is important because what I don't like, one, I don't like it when people lie, right? I don't like it when people lie long enough that it starts being touted as the truth. I do not like that. I hate that. And this is one of those issues that I feel has been propagated for far too long. It's like, why is it that we think that somehow if someone has money, they must have done something wrong or they're doing something shady or something? I've never understood that. Back even when we didn't have any money, I never understood that. Back, I grew up broke. A lot of people know my story about how when I was 6 years old, my parents were like almost ready to file bankruptcy. My first memory of money, I told mom she could sell all my Ninja Turtle video cassettes. Guess what? If that's your first memory of money, things aren't going so well. All right. And so here's the key finding. So this is going to be data from 2019. So the IRS released data on individual income taxes for tax year 2019, and it shows the number of taxpayers, the adjusted gross income, the income tax paid, the income tax shared by, income tax shares by income percentiles as well. And again, going back to my rant there for a second, the problem is I think most people, if they're having an issue with someone that maybe is a little bit higher up on the economic ladder than them, and therefore they're harboring either resentment or jealousy. That's an issue that they need to probably work out spiritually with among themselves, or maybe talk to some type of a therapist and really come to grips with why that is. But two, a lot of times what people are seeing is they're seeing the end result. They didn't see what it took to get there. Right. I was talking to a friend of mine that goes to our church, and he was owner of an auto repair shop here in town, an auto body repair shop for a really long time. One of the more well-known ones because they're always in Best of Lawrence and stuff like that. And we were talking about just small businesses and success, because one of the reasons that I guess one of the goals that I have this year is to win the Sunflower State Games martial arts division from my age group so that my son can see all of the work that was put in. Because when I set goals for my business, he goes off to school, I go off to work, and then, we come back at the end of the year. It's like, hey, we hit the goal, so we get to go to Mexico or whatever. We go on some staff incentive trip that we decided on. But he didn't see all the work that was put into it. He just goes off to school and plays and learns and does his stuff, and I go off and do my stuff. So I thought this would be a great way of showing him what actually goes into it, right? It's like he was not born into financial struggle like I was. And so I want to be able to teach him that it's like, it's not always that way. It's like, it didn't just happen, right? There's got to be a lot of work that gets put into it. And so he gets to see me go to the workouts. He gets to see me practicing even at home, right? And then he'll be able to come with me to the actual martial arts tournament and find out whether or not I actually win or if I get my butt kicked, right? So if I win, then he got to see the work that went into it and the fruit of the labor. If I don't win, well, he also gets to understand that maybe I needed to practice harder, or maybe I needed to practice more. And so he gets to see how also how you treat defeat. Do you treat it as a failure, or do you treat it as a learning opportunity? And so either way, win or lose, it's going to be a great lesson. And by the way, I don't plan on losing. I don't practice to get second place. So that being said, the gentleman I was talking to, he agreed. Most people see just the results of, the small business becoming a success. They don't see when they might have had $187 left in their checking account, didn't want to tell their wife, and yet they still had to buy more and more equipment, or in a lot of cases, pay their employees without taking a salary for themselves. All right. Those are the stories that I hear of the people that I know, that have gone through this, not the things that you read about in articles, because that can always be spun different ways. It's like, talk to the people that you know who have gone through stuff like this and find out what the real stories are. So this is why I love taxfoundation.org, because it cuts through all the crap and just gives you the numbers. So what we're going to find here, this is, like I said, this new data, it outlines the tax system it was the second year of the Tax Cut and Job Act, and it was the last year before COVID-19 came about. And the data demonstrates that the individual income tax rates, it continues to be a progressive tax borne primarily by the highest income earners. Let me say that again. Progressive tax borne primarily by the highest income earners, not the lowest income earners. It's the highest. In 2019, taxpayers filed 148.3 million tax returns and reported earning nearly $11.9 trillion in adjusted gross income, and they paid $1.6 trillion in taxes. The top 1% of taxpayers paid roughly a 25.6% average individual income tax rate. Remember, it's an average, because if you're in the top 1%, you're going to be making a lot of money. And then the way that the tax rates go, it's 10, 12, 22, 24, 28, 32, all the way up to the 37% tax bracket, right? But if they're only paying 25, well, it's because some of their some of their income is not taxed at all, because we all have our deductions, right? And then some of it was taxed at 10, some of it was taxed at 12, some of it was taxed at 22. So you blend all those rates together, and the average rate that the top 1% of taxpayers paid was 25.6%. That's the average, which is more than 7 times the taxpayers' rate in the bottom 50%. The bottom 50% paid on average 3.5% income tax on their adjusted gross income. So that is also a big misnomer. They say that as a percentage, we hear a lot in a lot of these articles that love to be written and published, that as a percentage of their income, the quote rich don't pay a very high percentage. And that's just not true. So here we have the bottom 50% of taxpayers only pays 3.5% on average of their adjusted gross income, while the top 1% pay 25.6%. The share of reported income earned by the top 1%, it actually fell. It fell from 20.9 to 20.1 from 2018. And so that means their share of federal income taxes paid fell from 38.8 to 40. It fell from 40 to 38.8%. So that also means that the top 1% of income earners paid 38.8% of all federal income taxes. Top 1% paid nearly 40% of all income taxes in America. The top 50% of all the taxpayers paid 97% of all income taxes, while the bottom 50% paid the remaining 3%. Top 50 paid 97, bottom 50 paid 3. Okay. The top 1% paid a greater share of individual income taxes than the bottom 90% combined. 38.8 again was what they paid. Well, the bottom 90 only paid 29.2. So the 1% still paid more than the 90% combined. Okay. And so those, I mean, I could probably just stop right there and be done with those percentages only. And I would have made my point. I've made my point. We do not need to be angry or try to say that somebody's not doing what they're supposed to be doing or not paying their fair share if we don't actually know what those numbers are. We cannot just, we can no longer, once we have this information, we can no longer say that. We can no longer have those preconceived ideas. We have to get rid of those myths, right? That's really what I want to be doing right here is I want to be busting these myths rather than being angry at someone for achieving something. Maybe we should wonder how they did it. Maybe we should take them out to lunch and ask them how they did it, and then maybe get some ideas about how we can do that for ourselves. That's how I look at things. If somebody's been successful, I don't look at it as jealousy. I look at it as a learning opportunity. And I think that's a much more progressive way of looking at it. It's also definitely, I would say, a much more beneficial way of looking at things instead of looking at something or someone with jealousy. I mean, shoot, that's one of the 10 commandments is thou shalt not covet thy neighbor's goods, right? And so if you're looking at what someone else has with jealousy, there might be an internal issue that you might have to deal with. But instead of looking at it with jealousy, look at it as a learning opportunity. You know, it's like what I've found is most people that have achieved whatever they've achieved to, high levels, they're not holding that information hostage. They want to share it, right? They want to help other people. It's like, you want to know how we did whatever it is that we did? I'll tell you. Now, I'll help you, right? It's like, I will let you know. We don't want to keep it big secrets. I mean, there's been tons of books written too by successful people on how to be successful. First thing it starts with is a mindset. It doesn't start with your bank account. It starts with the mindset. You've got to have the mindset before you can have the bank account. That's the big key. So there was a few other things that I saw in here. There was a table on this website, which the link is going to be in the show notes, right? There's a table that was showing all of the different, number of returns of the top 1%, bottom 50%, top 50%, top 25, top 10, top 5, all of those, right? And the average tax rates paid by each one of those. Top 1%, I said, was about 25.6, top 5%, 22%, top 10, 19.9. And it has the income split points, the average income taxes paid by all those different areas, right? It's got all that information. Well, then in the small print, it says something about how that this does not include, okay, so income taxes paid is the sum of income tax after credits, including the subtraction. So they're not including excess advance premium tax credit repayment, the earned income credit. So they're not including the earned income credit. They're not including the American Opportunity Credit. So those credits are actually not included in any of the numbers for the taxes that were paid. And because the reason was, and let me pull this up here real quick and tell you why that was. But when I read that, so I've got a history of preparing taxes. So I know if someone got earned income tax credit, then they probably got a pretty decent refund. So if they got a pretty decent refund, then they really didn't pay as much tax as what this is actually saying they did. This taxfoundation.org. And it's because the earned income credit, I guess, comes from a different kitty, a different pool of money. Let's see, where does it come from? Pardon me here. I'm just going through here. That's why it doesn't. Oh yeah. So the refundable portion is classified as a spending program by the Office of Management and Budget, the OMB. And that's why it's not included by the IRS in the tax share figures, because it comes from a different place. And so that means that the amount of tax that the percentage of the tax that the upper 1%, 5%, 10%, or whatever that I just quoted, their share should actually be higher than that, because the bottom share is actually not paying as much, because the earned income credits are not even considered in any of those numbers. And there's a lot of people that qualify for the earned income credit. Back when I was doing taxes, the first couple of years I did, it was for H&R Block. And the vast majority of all the taxes that we would do pretty much before March 15th, so I'd say maybe even before March, really, were those that qualified for earned income credit. After that, it was more of the ones that were going to be owing, because they don't want to they don't want to get their taxes done so soon because they don't want to pay. I know you can get your taxes done and not pay till April 15th. I know, but most people are like, I don't want to get them done until the last minute because I know I got to pay. So yeah, right, wrong, or indifferent for that thought process. But so that's saying that it's actually the people that are earning the higher income are actually paying a higher percentage even than what's stated on taxfoundation.org. So again, I'm not going to go through all the rest of this. I think I pretty much made my point here, guys. Because I hate data, or not data. I hate articles really that are set to divide. That's really why I'm doing this. Is I don't want to divide people. I'm not trying to say, hey, the rich aren't paying their fair share, so we should all hate them. No, I'm saying they are. They're actually paying more than their fair share. We should thank them for that. And instead of being envious, we should strive to be like them. I think more good people with money will do more good things with their money. So if you're a good person, we need you to make more money. We don't need you to be envious of those that do. We need you to make more money as well. Like I said, we need more good people making money so they can do more good things with it. All right. So that's it, guys. Now, part of our process is we are trying to help people lower taxes in retirement or lower taxes just throughout their entire life. And so if that's something that you do want to have happen, if you're like, you know what, I don't like how much tax I'm paying, well, then you can reach out to us, right? Our calendar link is going to be in the show notes. Get some time. It'll be a 15-minute phone call. If you want us to take a look at your taxes, if you're the same way, it's like, yeah, those people that are making money, they do have ways of lowering. I mean, instead of paying 25.6, they could have been paying maybe 30, but they have some people that know how to lower their tax liability legally. And so they only end up paying 25.6 when they could have been paying the 30, right? Well, if you're sitting there paying the 3.5 and you want to drop that down to 3 or 2.5 or whatever it is, well, then we should talk. Or if you're paying 15 and you want to breast it down to 10, whatever that is, that's where we can help you. Because we want to help people pay the least amount of tax that they're legally obligated to pay throughout their entire life. So that's it. There's my rant, guys. Again, if you take offense to anything I said, you please look internally first to whether or not you are maybe having that reaction because you may have some preconceived ideas, or maybe you've had those thought processes throughout your life based off of maybe whatever experiences you've had throughout your life. I'm not saying that those are necessarily wrong to have those feelings, but the true test of intelligence is being able to question our own thoughts. Because if you think about it, if you have a thought, you're not going to think that thought was wrong. We all think that the thoughts that we have are right. But if you can start questioning some of the thoughts or some of the reactions that you have to certain things, and whether or not those thoughts and reactions are correct, then you start to be able to impact, or you start to be able to have true change in your life. Because I knew that if I kept my same thought processes growing up, then I probably wouldn't have been able to have the success that I had. So I had to learn new success principles. And so I read lots of books by lots of people that made a lot of money to figure out what are the principles that need to be implied. What are the principles that I need to know? What are the principles I need to apply in all different areas of my life in order to become successful? Who do I need to become in order to have the life or lifestyle that I want to have? Who do I need to become to attract those that I want to attract? That is how it works first before, like I said, it's the mindset first, the bank account later is how it happens. So that's it, guys. Hopefully that wasn't too soapboxy. But if you liked what I have to say, email asknate@retirementrescueradio.com. If you disagree with anything that I said, asknate@retirementrescueradio.com, and we'll open up a dialogue. I would love to have a dialogue with anyone. If you are listening to this and you're like, okay, well, maybe Nate has a little bit of success and maybe I do want to ask him, right? I said, maybe you should take somebody to lunch and ask them questions. What did they do? How did they become successful? What are some of the things in the background that you didn't get to see that now you see the front of house? I call it, back of house, front of house. I used to wait tables and bartend. So, you always see the waiters and the bartenders out up front. You don't see the cooks and everything. You don't see your food actually getting made, right? And so That's the difference here. Everybody sees the front of house. They don't see the back of house. But if you want to know the back of house, that's how you're going to have the good front of house. So that's it, guys. Stay tuned. Next week, we'll have another one. I don't know if I'll have as many pearls of wisdom, or maybe they weren't pearls of wisdom. Maybe they absolutely stunk, and you can email them and tell me that they stunk. So, but again, we'll come back to you with some more content because we're always trying to empower you to live the retirement you deserve. Take care.